Accounting ratio part 3rd. Today we are going to focus on current ratio. Current ratio formula is very simple: current assets upon current liabilities. Yesterday we have seen in current assets, current liabilities, which items are there. Again I am going to repeat. Current assets means just maximum period of 12 months. Assets, there we find the changes. For example, cash, bank, cash balance, bank balance, sundry debtors, bills receivable, prepaid expenses, etc. Stock, inventory we may also call that come under the category of current assets. Current liabilities means creditors, bills payable, outstanding expenses, bank overdraft, such a type of items we find in the current liabilities. Now here just example is given: current assets upon current liabilities. Current assets are 2,50,000, current liabilities 1,25,000. Ratio 2:1. What it indicates? If the current liability ₹1, the current assets are 2, means double. Current assets are double we have. It means the external liability means current liabilities we can pay comfortably. Few more points we are going to discuss with current ratio. Remember that in current assets, just one point we discussed, that the 2:1 means current assets are double than the current liabilities. But in current assets we consider so many. For example, debtors. If the recovery period of the debtors is more than 6 months, all of you know that it is our practical experience, as the period pass, recover the amount from the debtors, it is a tough task. If it is 6 months, 8 months, years, then what happens? That amount is going to be bad very soon. It is rather difficult to collect the amount. Bad debts means what? In 3 cases we declare that amount is bad. If the person is off, means expired, one case. Second, unsound minded. Or third, that person declared bankrupt and won't have any private property, that amount becomes bad. But what happened here? If the recovery period is extended, that person having the solvency position, everything is there, live, he is sound minded, but still it is rather difficult to collect the amount as the period is passed. So that period should be reasonable, maybe 3 months, 1 month, whatever it may be. So that is the most important factor. Another thing, bank balance or cash, if it is much more, there also we find a limitation, there also we find a drawback. Funds, businessmen require to utilize the funds properly, then and then we'll find the result. Bank balance, cash balance is much more. What it indicates? That businessman, that organization is not utilizing the funds properly. So this is somewhat the drawback. One more drawback also we have here, dangerous. See that here, same example, current assets are 2,50,000, current liabilities 1,25,000, and in the period, say that 25,000 paid to the supplier, or we can say that creditors. Naturally, current liabilities and current assets are going to be decreased by 25,000. Previously, what happened? 2,50,000, current assets minus 25,000, as amount is paid means bank balance is going to be reduced, asset is going to be reduced. To what extent? That becomes the 2,25,000. Same case, current liabilities, payment to the creditors 25,000, previously liability 1,25,000, current liability reduced by 25,000 means current liability is 1 lakh. See that ratio 2,25,000 minus 1 divided by 1 lakh, ratio 2.25:1. That position is improved, but this is dangerous. If you are only focusing, you are taking the base as a current ratio, then it's dangerous. We require to refer some other ratios are also. But about the current ratio, we'll see few more problems so that the concept will be clear. Thank you very much.